Today I had this entry from gold, and actually I got this entry from the 4 hour, which price created this FVG, and in the morning, I mean like on the afternoon, I was waiting to see what price is gonna do after it reaches on this FVG, and actually price reached at the FVG, and I dropped all the way down to the 1 minute, if I'm not mistaken. Yeah, on the 1 minute, and this is where price reached and broke the structure here. I left this first FG, and this is where I currently kept my entry, risking like 89 pips. Like that's like that's something like three to four, 3 to 4 risk to reward ratio. So price just tapped and kept all the way going up, and eventually the end price retraced and came back to the entry. That's why it triggered me, but I didn't. I didn't hold this trade all the way up. I just had my take profit at the 4 hour, which was the last high that was near. So that's where I've been targeting my take profits. And actually, I see currently prices keep on going. From my TP, it's like 311 pips, and currently prices damn. Currently prices 600 pips, bro. Like what the fuck? But like it's great. Tomorrow is also another day. We gonna see and look at what we find. But I just wanted to address something here that I see mostly it happens on gold. That after you see that break of structure, I mean, first we have to see the liquidity grab, or we need to see a sweep. Then we see a break of structure. Then once we see this break of structure, we need to find any latest FEGs. And it doesn't matter even if price keeps on going, you just keep that FEG and trust your stop loss. Leave your stop loss to do its work. So price will come all the way down and test the FEG to keep on going. That's what I that's what really happened today. So like yeah, after you see the liquidity drop, after you see the liquidity sweep, wait for the market shift or market break of structure, then look at the nearest FG, nearest fair value gap. That's gonna be your entry point, and your risk. Your stop loss supposed to be all the way down to the lows. Like because price might come and sweep back again and still shoot up. So you supposed to keep your stop loss far away from the lows and risk to any nearest high. Yeah, that's the that's what I wanted to address today. This is my day one of the funded account, and let's wait and see more. This is Brandon's Effects. Don't forget to share, like, and comment, and subscribe too. Peace out.